Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 5th, 2021. I want to talk about heavily shorted stocks and how to benefit from it. So with that, last week was a great week for short squeezes. I'm sure many of you have made good profits. So with that, let's cover a few companies here. I got few companies. First one is PubMatic, very heavy short ratio, 46%. And we got Workhorse, same story, 42% short ratio, and so on and so forth. So we'll look at many of these companies and see how to benefit from it, because at the end of the day, we got to look at how to benefit from these short squeeze situations and take it from there. So with that, these are the heavily shorted stocks. I also typically I look at sales growth, as you all know. We got company here, price, market cap, the sales. It's very important to have good sales number, and look at the sales growth itself. How is it doing past 5 years? Past 1 year, quarter over quarter, and how is the margin? It's very important for a company to have good gross margin and also net margin. Then look at the debt to equity ratio. A high debt to equity ratio means companies leveraging too much, which should not be the case. We want to look at a little bit lower leveraged companies. And ROE represents a return on equity. Talks about it really represents companies' profitability. RSI is relative strength index. So if it's a high RSI, then we don't want to buy at that time because it's already overbought. But if the RSI is around, say, in this case, PubMatic, it's 31, that tells you, it's really oversold at this point. It's okay to buy. So typically, one way to think about it is really the moment RSI is low, like this, say 31, which is below 50, then you can see 1 day, 1 week, 2 week, all these numbers will be negative because, it tells you the stock is sold off. That's why RSI is low. By looking at the RSI, you kind of get a feeling how is it doing on a 1 day, 1 week, 2 week type basis. So, I look at RSI, how is the institutions, are the institutions buying into this stock? In case of PubMatic, yes, institutions are buying into this stock. And the short ratio, this tells me how many people are really, shorting this stock or having a short interest. So if the short interest is high, and the company is doing badly last couple of weeks or couple of weeks, and the RSI is low, and the company has good gross margin and net margin, that's when you kind of go and buy the stock against the natural tendencies and traditional belief. That's when you kind of make money and don't need to buy all at once. Buy slowly and accumulate. So with that, that's the methodology. The way this chart is organized is I have short ratio here. The one in the top, PubMatic, has highest short ratio, 46%. From then there onwards is the descending order. Next one is lower, and so on and so forth. And I also have highlighted some rows here. For example, PubMatic, HUYA, SmileDir. These are the candidates. You can, if you want to buy, those are the candidates for you to buy and expect a short squeeze and take it from there. So with that, let's cover few of them and go from there. First one is PubMatic. I love this company. These guys are into advertisement, programmatic advertisement. It's a $1.3 billion market cap company. Very low stock price. Stock price was very high in the beginning. As you can see here, they're off 65% from 52-week high. That's a steep drop. As you scan through this year, company is making money. There is a positive gross margin, 74%. That's a great number. They also have positive net margin, again great. No, very low or no debt, debt here. It's always good. It's a profitable. ROI is positive. RSI is low. Institutions are buying into it. And 1 day, 1 week, 2 week, 1 month, even 3 months, it's all negative. That's because these short sellers, they're breathing down this company's neck. So I think the situation should improve as we go forward. That's why I love to buy this stock and keep accumulating it. 1 day, it's a fundamentally great company. So 1 day it will start going up pretty soon. So next is Workhorse. Workhorse, as you can see here, $13 company. at $1.6 billion market cap. They got just $2 million in sales. That's not a great number, but because it's a low sales number, all 1 year, 5 year, 1 year, quarter-over-quarter growth, that kind of gets little bit exaggerated. So I don't go with these numbers because it's off of a low base. With that, this has got a little bit higher price to sales ratio. From a valuation perspective, it's a little more expensive. And also, RSI is 74. That tells you, company at this point is a little bit overbought. So you might want to, wait for it to cool off a little bit. Even though stock is 70% off a 52-week high, the RSI is indicating it's a little bit overbought at this point. Good to wait for a little bit entry point. With that, right now on Friday, it's off 11%. I would slowly start accumulating it. It's a $13 stock. So slowly accumulate it, on a down days and take it from there. The reason I say slowly is, as you can see here, 1 week 39% up, 2 week 54% up, 1 month 11% up. That's why there is no need to rush and buy this. You can buy slowly, and this has to cool off a little bit, and then buy slowly. Then we got SOFI. SOFI is a great company. I love this company. They're into fintech. I think they started as an IPO through SPAC merger. It's a great company. I think it's a $20 stock right now. Very heavy short float here. And as you can see here, they're down 8% in 1 day. So I think this one is okay to slowly start nibbling and accumulating a position. It's a great company and a great leader. And then as you go through here, we got a couple more. The way to look at it is really, as you look through this, 1 day, 1 week. So for example, here, Clover Health. Right now, their RSI is 62, and they're up for 1 week, up for 2 weeks, 30%. It's a great number. So you want this to a little bit cool off. Then, on a down day, you can buy a little bit. At this point, RSI being above 60 and stock has been doing great in 1 week, 2 week, I would not buy this at this time. Blink Charging, another great company. They're into autonomous vehicles and charging stations. As you can see here, right now RSI is 61. It's again very high valuation, 100 plus. They've done great for 1 week, 2 week, 1 month, 3 month. So I think we want to wait for this to cool off a little bit and then buy. And if you look at HUYA here, this is one of my favorite. I highlighted this stock here. As you see here, HUYA has been down for last 1 week and last 1 day. And even if you look at 1 month, it's down for 1 month and 3 month and even 6 month and 1 year. You might think, hey, what, is this a value trap because it's been down all along except maybe 2 week. Now, by looking at the details of this company, for example, it's sales, $1.7 billion sales, and sales growth is positive in 1 year, and quarter over quarter also is positive. Gross margin is also positive, net margin is positive. That's why I don't believe it's a value trap, because stock has been sold off because of these all Chinese internet companies. I would slowly start accumulating this company. I've seen this company a lot higher. Right now the company is down 59% from 52-week high. So as we go through this year, we got Clovis Oncology here, $5 stock. This stock, as you can see, it's gone up a little bit. I think this one is okay to buy a little bit. RSI is 47, safe to buy. It's a oversold situation at this time, and also I think it's a good one to buy. You could buy and expect a short squeeze as you go forward. Next is PetMed Express. As you know, many of these pet stocks have done terribly last week. PetMed Express, OOF, as you can see here. I would probably buy this also a little bit. Only caution is if you look at PetMed Express, even though they're down 0.94% in 1 day, if you look at 1 week, 2 week, they've been up all along. So buy slowly. No need to rush. RSI is 54. I would slowly accumulate this and take it from there. Next, Smile Direct. I highlighted this company. If you are a fundamental type person with a lot of fundamental research, you may not like this company too much. I'm kind of suggesting to buy this against the normal conventional wisdom here. As you can see here, it's got a good amount of sales. Sales growth is negative. I think they turned positive in quarter over quarter. Very good gross margin. Net margin is negative. Company is not making money, and very high debt. So as you can see here, these guys are into Invisalign and dental technologies. I think they got a lot of capital expenditure. That's why they got high debt to equity ratio. Companies leverage it a little bit. But as you scan through this year, they're down for one day, down for 1 week. 2 week they turned positive. That's a good sign. And 1 month, 3 months, 6 months, all negative. And they're down 49% from 52-week high. I've seen this company going up and down. So right now, because they're down so much, and I can see potential for this company, even though they have not done a great job in the past, these guys can expand internationally and give a good competition for Align Technologies. They're not there yet, but they can make it happen. So as you go through here, I also highlighted the EHang here. EHang is a $28 million sales at this point. I think they are positive from a sales growth perspective. I've seen this stock going up to more than $100. They're down 75% right now. As you can see here, they've done great for one day, 1 week, 2 week, and whatnot. Even though I bolded this, I don't want to buy at this time because right now they're up so much so quickly. I would wait for a little bit cool off. Even though this stock can take off, I would probably wait a little bit, let it cool off a little bit, given it's got 19, 21%, 50%. It's done very nicely past couple of weeks. Probably a couple of weeks ago was the right time to buy this one. So, that's the methodology I normally use. As you see here, a couple companies here, RHE Regional as an example, it's done great at this point, 23%, 22%. I would not buy at this time. I would wait for this to cool off. Same story with the Archimoto. It's a $11 stock, but as you scan through this year, RSI is 70. That tells you right now it's not a good time to buy. RSI has to come down. Right now it's overbought. Wait a little bit, let the RSI come down, below 50 or so, and then buy. But if you want to buy anyways, you could buy small amount. Don't buy too much because right now I think they're down 69% from one year high. You could buy slowly if you want to buy on down days. So with that, let's jump in and look at a few more companies. So I will not talk through all of these. You can just take a snapshot and look at yourself and see if it makes sense. Inseego, I recommended this stock long time ago. I think this stock is slowly getting its groove back. It's a $9 stock right now. As we scan through this positive sales growth, I like that. And in last one day, 1 week, 2 week, 1 month, even 3 months, it's done nicely. I think they had a very bad quarter last time and they dropped like heavily. Now they're slowly getting their groove back, 56% down from 52-week high. So I would slowly accumulate this. Right now RSI is 67. Maybe buy on down days, let it cool off a little bit and buy it. BG Food, as you can look here, right now its RSI is 60. They got heavy leverage. They have a lot of debt on their balance sheet. And as you see here, they've done nicely for 1 week, 2 week, all the way. I would probably wait for this to cool off a little bit and then buy. So we got a few more here. I will look at a few of the ones I highlighted here. Vibo. The reason I highlighted this is positive sales growth, as you can see here, and it's been kind of cooling off in last 3 months. One month, 2 week, and whatnot. I think this could be a good entry point. RSI being low, 42, that tells you stock is oversold at this time. I would be a buyer of this Vibo at this time and buy slowly and accumulate. Fastly, one of my favorite stock here. I've been accumulating this stock slowly. I think this is also a good one to accumulate. As you can see here, they have done not great. 1 year, 3 month, all the way. They've done okay in 2 weeks. They're gaining some momentum, and even 1 week. I think this is slowly waking up at this time. It's okay to buy some fastly. Given the short ratio is also high, I can expect a huge short squeeze any positive news. Next is Coven and QuantumScape. I like QuantumScape very much. $28 stock. As you can scan through this, they're doing okay in one day, but 1 week, 2 week, 1 month, all negative. I've been accumulating this stock slowly, and I think they got a great leader. He's trying to work through and make sure this company can produce solid state batteries. I think that's a great aspiration. And then we got Chewy here, same story. Company has been stalling in last 3 months and 1 month. Slowly they're getting their groove back. RSI being 52, positive sales growth. I would buy this company also slowly. This used to be a high flyer before. Now it's 37% off. Then we got a couple more here. As you can see, got KPTI $8 stock. It's off $57 from 52-week high. It's been off all along, as you can see here, 5 year, 1 year, 6 month, all the way to 1 day. It's been down all along. So what I would typically do in these scenarios is I would go against the normal grain of salt and slowly accumulate this $8 stock. I think, as you can see, there's a sales growth, good sales numbers, sales growth. I would slowly accumulate. Also great gross margin. So it may not go up right away, but it's good to accumulate these type of companies. It's a biotechnology company. On any positive news, it can shoot up like anything. Got MVIS here. I think this is already in a short squeeze situation. I've been accumulating in the past. As you can see here, done nicely for 3 month, 1 month, 2 week, 1 week, done nicely. Right now I think it's good to wait a little bit for it to cool off. RSI is 59. Approaching the overbought territory. I would wait a little bit. Then we got a couple more here. Octogen. This is a very high flying stock, goes up and down drastically. Given right now, it's 3 month, 1 month, all the way to 1 day. Kind of stalling out at this point. I would buy this and accumulate and wait for a good news here for short to get squeezed. Sun Power and Cinemark. As you can see here, same story. They've been stalling out in last 3 months all the way to 1 day. I would slowly accumulate this one and even Cinemark. I think with all the AMC Mimi stock mania, Cinemark is getting neglected. I think it's the $22 stock, down 20% from 52-week high. As you can see here, last 3 months all the way to 1 day, company has not done much. I think it's okay to accumulate a little bit, and any reopening news should bring this stock up again. So we got a couple more here. Real. It's a fashion retailer or a e-tailer. I think it's a good company. As you can see here, they're doing okay from a sales perspective. Quarter over quarter sales is positive. Nice gross margin. I love that. And as you see here, they've been doing not so great in 3 months, 1 month, all the way to 1 day. I would accumulate this stock also and wait for a short squeeze happening anytime. Same story with the Funko 8x8 and Envite and Sunrun. Same story here. As you can see, they've been stalling out in last couple months or so. I think they will do great too. And I have highlighted few companies here. For example, GoGo, very high RSI 72. And company has done great for last couple of weeks. I would wait for these to cool off. But if you are if you want to take some risk, you could buy some of these put spreads or short. But I don't recommend that. But if you are used to those techniques, you could look at short side of the house for these companies. That's another way. For that, you got to look at IV percentile as usual. See, is it worth shorting the stock or not? So with that, let's look at few companies in little more detail. First one, the company with most short interest is PubMatic, PUBM. So by looking at this company provides cloud infrastructure platform, enables real-time programmatic advertisement. I think it's a great company betting on advertisements online. So looking at the news here, top 3 software as a service stocks to buy from Motley Fool. CEO talks about growth drivers in digital advertising and 5 stocks that could double. All good news here. I don't see anything bad here. And from a fundamental perspective, company is doing great. They got earnings per share positive. Company is making money right now, and sales is accelerating. I love the sales acceleration, and shares outstanding is also dropping. That's a good sign. They are really there is no dilution when it comes to stock outstanding. And from a numbers perspective, as we talked about earlier, they're doing great from a sales perspective, 164, and they don't have too much history at this point. That's why you don't see any of these sales growth numbers yet. Nice gross margin, nice net margin. Good to see a SaaS company having net, earnings per share and net margin. Their debt itself, they don't have any debt. Total debt is zero, as you can see here. That's great to have. And nice ROE and ROA. That tells you company is profitable. Leadership is really great. They are good stewards of the company's money. And RSI is 31, telling you companies really oversold at this time. Good to buy and accumulate. A high short ratio. As you can see here, they've been doing not so great all the way from 3 months to 1 day. As you look at some of the fundamentals here, nice volume in 1 day, and also great volume in 3-month average. So you can trade in and out if you want to, but for this stock, I would slowly accumulate and build a nice position. Free cash flow is negative, so I think company has to work through this. Normally, companies like this, they tend to show free cash negative, which is understandable. As you look at here, from a 20-day moving average, they're negative. 50-day moving average again negative. And they're below 20 and 50-day moving average, and operating margin is positive, and operating cash flow is also positive. Earnings per share is $43, which is great, and there's also PE ratio is 43, which is a little high, but I would rather look at price to sales ratio, which is right here 8, which is reasonable, and take it from there. So with that, I would accumulate this company. I love this company. It's a great company. They will do great as economy opens up. More and more people start spending, advertisement dollars on digital assets. So if you look at the technical perspective here, nothing to boast about here. Company has been stalling out in last couple months. As you can see here, they're below 50-day moving average, below 25-day moving average, below even 9-day moving average, and now they're trying to use 9-day moving average at this point as a resistance level. I can see this going up and use 9-day moving average as a support and bounce off of it and take on these other moving averages. So with that, RSI is kind of stabilizing at this time. I could see this going up as we go forward. Implied vol itself is very low, not applicable right now. Volatility is very low. And right now it's completely bearish. The blue line here is below red line, and there's good enough distance between these two. That tells you right now bears are in charge. And as you look at the moving average here, on the balance volume kind of going down. So that tells you right now it's in a bearish territory. There is no need to rush and buy a lot of share. Keep accumulating slowly and go from there. If you look at the check-in money flow here, I think there is some positiveness. It went up, now it's flat to down. I think people are kind of warming up to it slowly, but I think this is the time when the chart is so ugly. Companies sound fundamentally. short squeezers or short sellers are breathing into its neck, it's good to go against the conventional wisdom and buy some PubMatic and go from there. Next is HUYA, Chinese internet company. It operates game and live streaming platforms. It's in China, as we talked about, and it also has entertainment content, talent shows, and whatnot. I think this will do well. They also have live charts, live chat. So if you see here, earnings per share perspective, positive earnings per share, they're all actually improving the earnings per share. That's a great news. From a sales perspective, I see sales going up and up and up. Nice acceleration. I love that. And shares outstanding is pretty static. It's not growing exponentially. That's always good. And as you see here, from a news perspective, I think looks like there is nothing great about in the news here. I think overall, 3 esports stocks that have over 60% upside. People are expecting this stock to have some upside. That's a good news. And from a numbers perspective, as you can see here, positive sales growth. I love that. $1.7 billion sales. That's great. They have net positive margin. Fundamentally, I guess company is doing well. They have a net margin here. No debt or very low debt, $13 million debt. That's not bad at all. Lot of cash, $1.6 billion cash. This company not going to go out of cash anytime soon. Nice ROE and ROA. That tells you company is taking care of the money and leadership. I would like to see it a little higher, but it's positive and it's almost reaching to double digit, which is always good. RSI is low, indicates you can slowly start buying it. It's oversold at this time. And institutions are buying into it. That's a great story. High short ratio. And this company, as you can see here, last 3 months onwards, did not do much. Kind of stalled out after the whole saga of, Archigos. I think stock did not recover. I think at this point, it's good to slowly accumulate. And as you look at the fundamentals, again, nice volume. From a volume perspective, $2.4 million on last Friday. On volume average is also great. You can get in and out of the stock easily without much slippage. And overall, I think as you can see here, 20-day moving average, they're down 2% from 20-day moving average. From 50-day moving average, they are down 12%. That tells you in 20-day moving average, in 20 days, they are showing some improvement here. They might take on, they can go above the 20-day moving average pretty soon by looking at this number here. And nice operating margin. And cash flow is 0 at this time. But I think, it's doing nicely. I would recommend opening a small position here and accumulate. From a chart perspective, as you can see here, nice looking chart. Last couple months is really down for this stock, but earnings here came down. Earnings are trying to stabilize at this point, and right now we have multiple moving averages. We got 50-day moving average, 25-day moving average here, and the blue one is a 9-day moving average. They're trying to bounce off of this 9-day moving average. I think that's a good news. I think they can take on this slowly and then use that as a resistance support level and go up. Implied wall, very low. IV percentile is 23.5. I think volatility is slowly creeping up, which is not bad. Right now, stock is bearish. The red line is above blue line, but the distance is not too much, so it's trying to decide which way to go. From a volume average perspective, it's kind of, it went up. Now it's kind of cooling off a little bit. Check-in money flow, same story. So I would, accumulate this because once these stocks take off, it's hard to buy at the time. You would slowly accumulate as the stock is kind of cooling off and, have a nice position. Next is SmileDir SDC. This is an oral care company. They have clear aligner therapy treatment, and they work through a network of 250 state licensed orthodontists and general dentists. and they also going into multiple regions, USA, Puerto Rico, Canada, whatnot. I think this company can really do well. Right now they're a little bit down. Looks like they got huge debt load here on their back, which is always the case in many times. A lot of these bankers and they all make some money and put a lot of debt on these companies, and these companies need to really work hard to get rid of those debt levels. So from a earnings per share perspective, company is not doing great. It's been negative, mainly because company is trying to work on its own platform and make it more stable, and R&D. From a sales perspective, I think they're trying to improve. I think it's okay. It's not great, but it's okay. They had a nice acceleration, then came down. That's why from 2019, stock is not doing great. It's up and down. Shares outstanding, I love this. They have reduced their shares outstanding. That from a dilution perspective, it's a little bit lower. It's good to see this type of chart with the shares outstanding going down drastically. And from a news perspective, Investor Place is saying it's a cheap stock to put on your buy list. That's good news. And as you see here, under the radar stock, reopening of America, that's good. Overall, I feel it's a good news here. As people are getting more comfortable to go to dentists, I think this company can take advantage of that and sell their product and make profit. And from a fundamental perspective, $8 stock, nice sales, 660 million, and quarter over quarter, 1% positive. That's the good news. Nice gross margin. Net margin is negative. A lot of debt, like we talked about. Profitability is negative right now. They're not making money. RSI is 52. It's okay because it's below 55. Company is a little bit over sold at this time. Good to accumulate. They have done not much. All along they were negative. If you're a pure fundamental person, you would not buy this stock. I would slowly buy this and go against the traditional wisdom. And from a fundamental perspective, again, very high volume. Companies trading nicely in 1 day and 3 month. Lot of cash, 435, and like we talked about, a lot of debt also. That's why the debt to equity ratio is high for this company, 3.5. As you can see here, they took on, they went above the 20-day moving average. That's always good. Still, they're below their 50-day moving average. I think they're slowly trying to improve at this point. Operating margin negative, ROA is also negative. Operating cash flow is negative. So I think company is trying to slowly gain some traction here. Let's look at technicals here. As you look at the chart here, nothing to rave about here. Companies are not doing great, but last couple of weeks, as you can see here, companies trying to make some stride here and try to go up slowly. It kind of took on, it went above 9-day moving average. It's trying to go above 25-day moving average slowly. Those can become support level. It can bounce off of that as you go forward. From a RSI perspective, it's it's strengthening at this point. As you can see here, it's nice positive uptrend. This with a small downtrend at the end, but overall it's a positive trajectory. And from a DMI perspective, I think it tried to take on, try to cross over the red line here. That will be positive, bullish crossover. But right now they're not there yet. I think they can do it probably next week if it does well. Volume average, I like this. Volume is improving. That tells you, this rally, slow rally here, it's got some teeth behind it. The company is really, on the balance volume is positive. That's always good to see. And smart money is flowing into the stock. Check-in money flow is going up. So that's why I feel it's okay to buy this company and hold it for a while. So next is Vibo. It's a Chinese company again. They have a social media platform to create, distribute, and discover content. Again, China-based company. And this company, as you can see, our earnings per share positive and a little bit downtrend from 2018 all the way to 2020. Sales is pretty constant, little down in 2020. Shares outstanding is pretty constant, nothing to worry about here. From a news perspective, looks like folks are really talking about here. Let's see, Vibo shares lose steam. Yeah, nothing great from a news perspective. So here. So with that, let's look at the fundamentals here. I think $47 stock. They've done okay from a sales growth perspective. $1.8 billion sales is not bad. Nice gross margin. It's typically software companies have got nice gross margin. They're making money, positive net margin. Debt to equity is a little high. That tells you they got a little more debt load, which is not bad. It's okay. It's not great, but manageable. ROE is positive and ROA is also positive. That tells you companies are really profitable at this point and leadership is doing okay. RSI is low. You can slowly accumulate. Companies over sold at this time. There's a good institution support here. I like to see this above 50, but it's okay. A high short ratio, and they've been stalling out since last 3 months. That's why I feel like it's okay to buy slowly and accumulate. From a fundamental perspective, again, nice volume in 1 day as well as 3 months. It's good to see that. They got $3.4 billion cash. They will not run out of cash. At the same time, they got $2.4 billion in debt. They are kind of flirting around with the 20-day moving average and 50-day moving average. A little bit below those two right now, but I think they can improve. So with that, let's look at the chart itself. As you can see here, there is a very nice trading range since last 3 months. They are kind of right there. This is where if you're, if you're butterfly trader, you could, buy some butterflies. It'll do well. But I feel like this company can do well. Probably can accumulate slowly. From an RSI perspective, nothing too great. RSI is a little bit low. Trying to make a small comeback here. DMI perspective, there is a gap, the red line above blue line, so it's a little bit bearish at this time. On the balance, volume is kind of flat to down at this time. Check-in money flow is also flat to down, so you could slowly accumulate against the natural traditional wisdom here and hold it for a while. This should do great as Chinese companies come back. So with that, thank you very much. Happy investing and trading. Please subscribe.